Federal Reserve Chairman Jerome Powell and Treasury Secretary Stephen Mnuchin are getting ready again to be questioned by lawmakers regarding the emergency money given out because of the coronavirus pandemic. To break down what you should expect from the Fed chief today is Fed correspondent Brian Cheung. Brian, good to see you here. Jerome Powell's prepared remarks are already out. What are they?
Well, Brian, the Federal Reserve Chairman sounding like a broken record and again trying to tell Congress that more might be needed. It really all depends on how the data shakes out. The Federal Reserve did say that it's encouraged by some of the opening up metrics that we've seen. Businesses, again, coming back online, hiring been picking up, spending has been increasing, employment said to have rebounded strongly in the report that Chairman Powell and the Federal Reserve announced yesterday. Now, Fed Chairman Powell did say, however, quote, while this bounce back in economic activity is welcome, it also presents new challenges, notably the need to keep the virus in check, end quote. So this pointing to some of the worrying economic information, if not data, that there are indeed more cases cropping up in states like Texas, in states like California, that being an economic concern, because obviously if there were to be a pickup and states would have to reclose again, that would pose a number of economic risks to the outlook. Brian?
Brian, I think this market also wants to see Treasury Secretary Stephen Mnuchin tease more about a potential stimulus package.
Absolutely. Well, we've heard from the Treasury Secretary in previous weeks that there could be a phase 4 package of some sort, not necessarily clear exactly what would be in that package. We've heard some waffling from some White House officials over whether or not that might include something like another stimulus payment or extended unemployment insurance benefits, for example. But that would be a big focus for this House Financial Services hearing, where you have a number of Democrats, which, by the way, this is a Democrat-led committee, maybe pressing this Treasury Secretary on what could come if there were to be another stimulus package. Now, what we saw in the last time that we had the Treasury Secretary alongside the Federal Reserve Chair testify is that Mnuchin fielded a lot of the fiscal policy questions, and then Chairman Powell received a lot of the monetary policy questions. But as Chairman Powell has pretty clearly laid out previously in press conferences and other congressional hearings, he said that there could be more actions needed from both policymakers, monetary and fiscal policy sides, in terms of making sure that the economic recovery is set up to be as fast and as vigorous as it possibly can be. But again, it seemed like it'll be an interesting update from the two officials over whether or not the government could do more to make sure that that recovery is intact.
Brian, I know you're always working the phones. Are any of your Fed contacts or sources starting to get a little concerned about inflation because of the low rates from the Fed? And I ask this because we've seen a tremendous run in gold prices, and that usually happens on inflation concerns.
Well, Brian, I'm checking my phone right now. No text messages so far, which means that unless there's an update, none of the federal officials that at least I've spoken to or that I've heard from have really emphasized any sort of inflationary pressures at all. If anything, some actually expect the inflationary pressures to be more disinflationary, not deflationary, disinflationary. And we've seen that through some of the recent reads that we've gotten on inflation. When you look at CPI, or core personal consumption expenditures, which is the Federal Reserve's preferred measure of inflation, it's actually gone down since the COVID-19 crisis. So the Federal Reserve saying that this is just part of that, trend that we've seen over the past decade or so, where you don't see a lot of the monetary policy overstimulating consumption and therefore overstimulating inflation, which drives a lot of the Federal Reserve's policy making and thinking so far that they can provide the amount of stimulus and print the amount of money that it's printed without any sort of inflationary response to that. So that's something that if Chairman Powell will, and he probably will face a question like that in the hearing today, will probably say something along those lines that if anything, the consequences of this COVID-19 crisis and of the Fed's reaction won't be inflationary, it would be disinflationary.